So, you're closing your business in Malaysia. Well, it's about more than just flipping the sign to closed for the last time. There's one final hurdle every entrepreneur has to clear: settling up with the taxman. Let's get right into it and break down exactly what you need to do to close your books, keep it all legal, and most importantly, avoid any nasty surprises later on.
Thinking about shutting down your business, it's a massive decision. It's the end of a huge chapter in your life. But honestly, beyond all the emotional and operational stuff, there's this maze of tax rules that you absolutely positively have to navigate correctly.
Look, before you can just walk away, you need a rock-solid plan. This isn't just about selling off some old chairs and computers. It's about calculating that final tax bill right down to the last cent and making sure you've met every single one of your legal obligations. Why? Because even a tiny mistake here can blossom into a really expensive headache down the road.
All right, so let's start with the most basic question. From a tax point of view, what does it actually mean to close your business? Well, the official word for it is cessation. And believe me, the tax authorities have a very specific definition for it.
According to Malaysia's Income Tax Act, cessation means a permanent stop. I'm going to say that again, permanent. This isn't a pause, it's not a holiday break, it is a full-on, pencils down, end of the line. And that moment, that permanent stop, is the official trigger that starts the clock on your final tax assessment. That one word, permanent, is everything.
And this is where a lot of people get tripped up. Let's make it super clear. Selling off the entire business, liquidating the company, getting rid of all your assets, yep, that's cessation. But just closing up for a few weeks for renovations? Or maybe you run a seasonal business and you're closed for the off-season. As far as LHDN is concerned, that is not cessation. That's just a temporary break.
So you might be wondering, how do they even know for sure? Well, they look for some really clear signs. Have you sold all your stock and equipment? Is the office or shop empty, either sold or vacated? Have all your employees been let go? And the big one, has the company been legally and formally dissolved? You start ticking these boxes, and for the tax office, it's a clear signal that your business is officially done.
Okay, so we've nailed down what cessation actually is. Now let's get to the part I'm sure you're all waiting for: the money. What does all of this mean for your wallet? What are the real financial consequences of closing up shop? When you cease operations, it basically triggers 4 major financial events. First, it locks in your final tax period. Second, it forces a final calculation on all your assets. Third, you might have to deal with something called a balancing charge. We'll get to that. And fourth, it actually changes the rules for how your business losses are handled. Let's dive into each one.
So, first things first, your final tax period. It's pretty straightforward, but the timing is everything. Your taxable income is calculated from the start of your usual accounting year right up to the exact date you officially cease operations. Every single dollar you earned up to that specific day goes into that final calculation. Okay, remember that term I just dropped, the balancing charge? I know, it sounds like some confusing tax jargon. But honestly, the idea behind it is pretty simple. It all comes down to what happens when you sell off your business assets. Things like machinery, computers, or office furniture.
Let's walk through a quick example. Imagine you sell an old company machine for 10,000 ringgit. But on your tax records, after years of claiming depreciation, its official tax written down value is only 7,000. That 3,000 ringgit gap between the sale price and the tax value? That's your balancing charge, and it gets added back into your taxable income. Because from the tax office's perspective, you made a 3,000 ringgit profit on that sale.
Now, it's not all about paying more tax. There can actually be a bit of a silver lining here. If your business ends up with a loss in its final year of operation, you can often use that business loss to reduce other income you might have for that same year, say from investments or other sources. So it could actually lower your final overall tax bill. All right, we've talked about the what and the why, we've covered the definitions and the financial stuff. Now, let's get really practical. Let's build your action plan, your checklist for doing this the right way. Think of this as your quick cheat sheet for assets. Money from selling your leftover stock? That's simple. It's just final income. Machinery? That's what triggers those balancing charges we just talked about. But here's a big one to watch out for: prepaid expenses. Let's say you paid rent for 6 months in advance. Once you seize your business, you generally can't deduct the portion for the months after you closed. That's a classic trap that catches a lot of people off guard.
So, when you get right down to it, it's a 4-step process. 1, figure out what you're doing with all your assets. 2, run the final numbers on your capital allowances. 3. Calculate those balancing charges and figure out how to use any final year losses. And 4. And this is the most important step of all. You must officially notify LHDN and file that final tax return.
I really cannot say this enough. This is not a suggestion. It is not optional. Telling the tax authorities that you have ceased business is a mandatory legal requirement. It's the one thing you have to do to get your tax file closed properly and cleanly. Whatever you do, do not forget this step.
And that really brings us to the final thought I want to leave you with. Your business journey might be over, but does that mean your tax obligations are too? Not automatically. Your final act as a business owner, the truly last thing you do, is to make sure your tax affairs are completely and correctly settled. Make sure you get it right.